What's up, everybody? I decided that this week, instead of doing the write-up for the weekend review, I would actually talk to you about it and give you my personal feeling. You can see my emotions and what I'm thinking about. And, you know, I got to tell you something. I look at this market and I look at what's going on. And, yeah, great, your equity prices are higher. Your 401ks and your IRAs are doing well, and I'm happy about that. But when I look at what's going on throughout the central banks, throughout the globe, and the worldwide economies, don't you find it amazing that we continue to have to make adjustments and manipulate a market to bring asset classes higher? And what does that mean in the forefront going forward? You know, if you take a look at, for example, let's look at the Japan model that started 25 years ago, the silver anniversary of Japan starting a quantitative easing program. And where have they gone since then? Well, they're still doing quantitative easing, and they have yet to recover from what's going on. So as we look around the globe, and we saw on Thursday where Mario Draghi finally got his lip service program going, and they've done some quantitative easing now. Looking around, we see it doesn't help. You cannot inflate your way out of a debt. You cannot continue to try to print money and continue to help the wealthy. The average American, the average middle class person here has done nothing but lose weekly income, seen their ability to purchase go lower. So yes, now we're having a tremendous crumble in the oil markets. And yes, they're saying that this is like a big tax cut for the American consumer. What about the American consumer that can't pay their bills? What about the American consumer that's having trouble making their mortgage? As we continue to try to become a economy and a country of entitlements, according to what's going on in the White House right now, all we see is people making less money, working harder to do so if they can work at all. The unemployment rate is, you want to talk about 5% or whatever the number that they're peddling out there? Well, let's really look at the 5%. The labor participation rate is the lowest since 1978. So we're 37 years away from normal participation, if you want to call that normal. We are creating a series of jobs that are minimum wage instead of regular real jobs. And now, not only that, but now we're losing the oil services jobs. So for every one person at Schlumberger that loses their job, that takes out 4 minimum wage jobs, which means, again, less spending power to create movement in the overall economy. Economies cannot be printed out with phony money. We cannot be done with manipulation. They cannot be done through a legalized Ponzi scheme. If you look at the big picture, what do we see here? We see a market that is being developed by the Federal Reserve by artificially pumping up asset prices at the equity level, yet your house, your car, everything else you own is losing value. We are coming into a very serious period here of a deflationary time as we see markets push higher, the US dollar at 8-year highs. Things don't work that way. When you look at an economy and you think about how it's done, when you build a business, which our economy, the United States of America and every other country, is their own company. You cannot continue to build a company on hopes and dreams and continue to try to leverage up and push up prices. We are doing nothing more here than anybody else, and we're trying to leverage into the future, hoping that the problems disappear. The problems never disappear. It takes good, hard decisions in running a business. For all of you entrepreneurs out there and all of you business owners, and I know many of you who listen and read my stuff are business owners. You cannot make these decisions. If you or I did what the central banks and the Federal Reserve is doing right now, we would be in one of two places. That is bankruptcy court or jail. Because what they're doing is, first of all, makes no sense. It is a legalized Ponzi scheme that continues to bring new money to a market that doesn't need the new money. Can't we see that the falling interest prices are killing the economy, that the liquidity for the average Joe and for people around the street is not provided? Why do you think housing sales are low? Why do you think spending is down? Because people can't get money, so no matter how cheap the rates go, people can't get the money. Look at the yield curve, and that is the difference between short-term rates and long-term rates. The 30-year bond is at record lows and has been making record lows almost every day. The 10-year at 1.8%. The yield, in other words, the yield curve is supposed to go up gradually, and now the yield curve, which is the rate of interest rates from short-term to long-term, has now started to flatten. Okay, so what is that saying to us? All I can say is look at the model that Japan has provided. Look at what we've gone through the last 6 years. Yes, equity prices are going higher, and if you're benefiting from it, that's great. As a trader and an investor, you can benefit from these kind of markets. But when you think about the overall economy and you think about what's going on with yourself and with your family and what's going to happen to your children going forward, you can't be thrilled about the overall situation of what we're seeing. Again, the equity market and Wall Street, Main Street and Wall Street have nothing to do with each other, and I get that. And I'm not telling you not to invest. I'm not telling you not to think the market's going higher, but I can guarantee you this. There will be another market correction, and there will be another market collapse. And if we don't think so, we're only kidding ourselves. Because to quote Albert Einstein, what is insanity? The process of doing the same thing over and over again and expecting a different result. Well, we've seen from Japan that this type of program doesn't work. We know it's not going to work in the long term. So at the end, we need to make hard decisions, and the Federal Reserve needs to raise interest rates to make the markets actually perform better. Yes, the equity market will take a hit. Yes, there will be some fallout. But at the end of the day, to get a smooth running economy, the only way to do that is to create liquidity and the velocity of money, where money will move back and forth throughout the system. Right now, the money doesn't move anywhere. It goes right into the pockets of the wealthy, and it never trickles down, because Joe the plumber, who was supposed to be the big campaign speech from 2008, has not done his job in fixing the drain to let the money trickle down. So when you think about it, yes, you can benefit from the markets. I'm happy we can make money trading. But at the end, for the overall economy and for the health and wealth of everybody else, Janet Yellen, you need to step up and raise interest rates. Take the hard road here this time, instead of continuing to try to flush the system full of crappy money that does not work. We'll see you all later. Have a great week, everybody. Thank you.